Step into one of those mega super jumbo centers and try and find a friend or just somebody you know. Not easy, is it? Especially when there's a mile between the milk and the apples. But then there's the folks who work at your locally owned IGA. They're your hometown friends and neighbors.
Hi, I'm Jack. Here is a store story, a fresh look at the small independent grocery store. Now today we're going to talk about accounting and shrink. These two things are the least talked about by the small independent grocer, and in my opinion is critical in the independent grocers becoming profitable. I believe this video about accounting and shrink just may increase your profits an extra $50,000 a year. Our in-store accounting and shrink control are proven profit savers that I use to increase profit in my store. Now I've been in the grocery business 40 years, competing with the big box stores on the left and the Save-A-Lots and the dollar stores on the right. To compete, we reformatted our store to control the cost to move groceries, and we changed our product selection, service level, and went to an everyday low price structure to gain price credibility in our small rural market. Accounting and shrink control has been a critical part of our changing our store. Accounting and shrink control must be simple, manageable, consistent, and needs to be executed in store by the store owner manager with an acceptable cost of money and labor hours. Now the purpose of this short video is to show you how we integrated an Excel sheet, a QuickBooks to our front end register system to secure our money to the bank, and how we become accountable on our DSD vendors, our departments, and our expenses with our QuickBooks. A computer, an Excel sheet, and QuickBooks, and the time spent to learn using them and applying them to my small grocery business has given me the information I needed to change my store, to grow sales, and most important, to grow profit. With a computer and the right software, good accounting is attainable, and the best investment in time and money any small independent grocer could ever make. Accounting and shrink must be integrated into your total store format with the cost to execute them took into account. Now we redid our store format with the cost to move groceries our main priority. We reduced our labor to 7%. We cut our weekly store hours from 950 hours per week to 650 hours per week. We retained sales and gross profit, and most important, we grew net profit 3 to 4% in our total store. We grew our net profit with a major store reformat, but we started by becoming accountable. An accurate, cost-effective in-store accounting program, daily, weekly, monthly, and quarterly, give us the information we needed to make good management decisions. Now first, our store is on a cash basis for all vendors. We're 7 days on our warehouse payments. We post warehouse purchases, enter all checks for the week to our QuickBooks, do payroll on Friday, and we get an instant P&L. We control DSD vendors by making them accountable for profit out the front register. We have one bread, one milk, one chip, and one major soft drink vendor. Now we track purchases and sales weekly, monthly, quarterly, and make the vendors accountable for profit of their sales, or they'll lose their shelf space. Controlling vendors by making them accountable for profit and being on a cash basis has cut labor hours, and we increased our margins in DSD sales. We do daily deposits and reconcile sales to deposits weekly, monthly, and quarterly to confirm all deposits got to the bank. With all our money in the bank, we use QuickBooks to track DSD vendor purchases in all departments for sales, purchases, expenses, and payroll. Now, our total accounting cost is about 25 to 30 hours per week. This accounting program eliminated a backdoor person, a scam person, and a hosting cost. And most important to me, it grew our net profit. Now here's a short summary of our daily, weekly, monthly, and quarterly accounting. Daily sales by cashiers is cleared using our front-end scan system. This clears the cashier's register by making sure the cashier balances are registered. The head cashier makes a daily deposit by registers. We have 4 registers, 4 deposit slips. These 4 deposits equal deposits in the bank from the daily front-end balancing program. This report has customer count, transaction per customer, voids, refunds, no sales, coupons, and I believe this is just a common practice for all of our stores. Now weekly, on Friday, we pull a front-end sales report. We go online to the bank and get the 7 days of deposits and reconcile the 7 days front-end sales and the bank deposits. We use an Excel sheet to reconcile the front-end register to those deposits. We use QuickBooks and enter the bank weekly deposit totals as our weekly absolute sales by department. Now we then enter all other checks for the week, do payroll, and at this time we have a instant P&L, no outstanding bills every Friday. Now this Friday morning accounting process takes about 3 to 5 hours. Monthly, we reconcile the bank account, then do a monthly deposit to bank reconciliation by pulling a monthly front-end sales report. We reconcile this monthly front-end report to our bank statement to balance the monthly sales to deposits. Now this confirms that our money got deposited for the 30-day period. Our monthly accounting focuses on reconciling our bank account and making sure all our money has been deposited. This simple step of securing money to the bank is a key point of this video. Now quarterly, we do a complete store evaluation. We do a complete store inventory, reconcile bank deposits, we check DSD vendors, we check departments for sales, profit, and labor. We do a total store labor analysis by department. We do a total store cost to move groceries evaluation. And most of all, we do a total store net profit evaluation. If you're serious about making your store profitable or more profitable, do these things and start changing now. I know times are tough for all small independent grocers. Here is a thought for you. Now, which one is more likely in today's grocery environment? Grow your volume 100% or double your net profit by 3 or 4%. A good in-store accounting and shrink program could get you halfway to this. Now think about it. Our quarterly report by department and profit makes our grocery, dairy, and frozen manager responsible for sales and profit. for grocery, dairy, and frozen. These three departments are 45% of total sales. Grocery profit is 18 to 20%. Dairy and frozen are 25% and plus. Labor hours to do grocery, dairy, and frozen is about 240 to 260 sales per man hours. The manager's quarterly bonus depends on these consistent numbers. Now here's meat, dairy, and produce sales and profit sheet. Meat, dairy, and produce do 20% of total store sales, but they account for about 28% of total store profit. The managers of these three departments is responsible for them by sales, profit, and the labor to execute them. QuickBooks does a great job of tracking departments, DSD vendors for purchases, sales, and labor costs. Now my main point here is, with our tobacco barn at 12% store sales, we have 95% of our total sales accountable and profitable at a very low accounting cost. Now we're consistently moving total store sales for 12 to 13% cost to move groceries, and consistently making our profit margins with our accounting program. Keeping a good set of books helped us turn our store around. Now, in my opinion, the owner-manager doing their own in-store accounting is the best time spent in any small grocery store. Now, the added benefits was our accounting has give us the numbers to make good management decisions that we simply didn't have in the past. Now, here are a few of those examples. Our accounting, with knowledge of our market, allowed us to change our service and product selection in deli and meat. Our total store reformat started with deli and meat. Our accounting tracks sales and man hours. Without those numbers, we could not have cut the 300 hours a week off our schedule. Hourly sales report showed us a lot of slow sales in the morning. Now, in the past, we opened at 6 a.m. and closed at 10 p.m. Now, we open the doors at 9 a.m. with low sales, 9 to 10 a.m. We have our first cashier come in at 10 a.m. We close at 8 p.m. These low store hours have worked great for us. HBC and health and beauty was an easy decision when we become accountable. Our HBC accounted for over 10% of our total inventory. HBC was less than 1% total store sales, and we had a 5% profit in HBC and health and beauty department. We cut inventory, we cut steel items out, and we moved HBC as close as possible to the front cash registers. Here is an example of QuickBooks report for labor hours by the quarter. Now this quarterly hour report, plus adjustments for vacation and some cash payroll, gives us a productivity per man hour for these parts of the store: groceries, deli, store front end, meat and produce. QuickBooks Payroll, along with a digital sign-in time clock, gave us the control needed to reduce payroll. Labor savings reduced our total store cost to move groceries by 2%. Now, here is groceries, deli, store front end, and meat and produce. Hourly sales sheet. We do this every quarter. This simple report on store sales by labor hours was a big help when we reduced our total store labor from 950 hours a week to 650 hours a week without losing volume or profit. These sales per man hours are consistent quarter after quarter. Our accounting has given us the numbers to make good management decisions that we simply didn't have in the past. Now here is a few of those examples. Our accounting clearly showed DSD vendor sales and profit increased when we went to our accountability of DSD. This was a pleasant surprise no one expected. Our store managers was slow to accept our hourly productivity quarterly report, but this has clearly showed our past labor weaknesses and gives me a clear and distinct tool to manage labor. By reducing total labor cost and increasing hourly productivity, the store was able to give a 10% payroll increase for anyone that has 6 months time at the store. This payroll increase has boosted store morale and reduced employee turnover. Now, store shrink is a silent killer for many a small independent grocer. Now, I've been broke 2 or 3 times in 40 years. I've been flooded. I've been burned out mentally. And I've been burned down my store literally. And I've been robbed 3 or 4 times. But shrink is a much different problem. Now, we can't see it. We have no way of knowing the cost. We have to address shrink 24 hours a day on our faith of knowing it is the elusive, silent profit killer that can't be completely stopped. Now, don't become complacent on shrink. The grocery industry puts a number of 1 to 2% on shrink to total grocery sales. Now, at $50,000 to $100,000 yearly shrink for the small independent grocer, that's a big deal. Shrink can be a game changer. And if owner management is not setting the example of addressing shrink, you have a big problem in your store. Now, my definition of shrink is employee and customer shrink comes from within the store. Both can be addressed with store rules and a strong management policy. Now, DSD vendor theft is by shorting the store of product or by not keeping the price up to date. Store management and price discrepancy, department profit. The wrong price from sale items not being changed and not changing prices as the product goes up. Changing and updating weekly prices. Management theft from the store safe to the bank account. Now, this possibly have been the most costly shrink problem. These few things are 80% of shrink. We've addressed these things by doing the following things here. Now, we don't cash checks. We don't do local credit, even for the churches and the local organizations. We don't do gift cards. We don't mix gas and lottery money with our store accounts money. Now, the point of this video is to show how to secure your money to the bank and control your money from the bank. In my opinion, mixing money with check cashing, lottery, local credit simply eliminates all the security of your money. I would advise anyone to consider not mixing money because it complicates your accounting to a point of confusion, which is opportunity for backroom embezzlement. Now, our grocery manager is responsible for sales, labor, and profit of grocery, dairy, and frozen. These three departments are 45 to 50% of total store sales. His bonus is based on moving those three departments with a $200 to $260 sales per man hour, a 20 to 21% grocery profit, with frozen and dairy both being 25% or more profit. Meat, produce, and deli are 20% of total store sales and controlled by one manager. Meat, 22% profit, produce 30% profit, and the deli at 40% profit. Now, deli sales to labor is $55 to $60 per man hour, and meat and produce man hours to sales is about 130 to 140 sales per man hour. DSD vendors are 20% of total store sales. An interesting point about DSD vendors and their contribution to total store sales and profit. When we become accountable, we found DSD vendors' profit margins too low. We cut the number of vendors, made them accountable for margin, and we lost some DSD vendor sales, but we improved profit. Now, grocery, dairy, and frozen, meat, deli, and produce, 20% sales, and DSD 20% of sales. This is about 80 to 85% of our total store sales. Now, we control costs to move these departments, and we control the margin. The result is a consistent net profit. This is done without a backdoor room DSD controller, without a scan person, and only 20 to 25 hours a week for accounting. We have an in-store tobacco barn. Our tobacco barn does about 12% of total store sales. We cut a consistent 10% profit in our in-store tobacco barn. Now, we make the tobacco barn department accountable for profit. We have cigarettes and tobacco behind our service counter. We restrict the tobacco counter to head cashiers. We have control on our tobacco barn. A word of caution about tobacco. If you don't control tobacco with a consistent inventories and accountability of a good set of books, you're going to lose in tobacco. Don't do tobacco if you can't control it. You'll lose. Now, two managers and DSD vendors do a great job of controlling costs to move groceries and profit for 80% of our sales. With our in-store tobacco barn, we have 90% of our sales manageable, accountable, and profitable. Our accounting makes this possible. Without a good set of books, you simply would not be able to control profit and labor and cost to move groceries in our store. We address customer shrink theft with employee training by being aware, by being prepared, and staying alert. We have two large TV monitors at the head cashier's register. Now, that cashier watches the customers coming in the front door, and she's trained to watch for questionable customers. Now, they can see every part of the store, every aisle, from two angles: back room, break room, and parking lot. Thieves can see that they can be watched. Having big screen TVs in view of the customer is actually deterred theft. Now, this high definition camera system, every aisle has cameras at the front and back of the aisles. All back rooms, the break room, the parking lots all have high definition cameras, and we have large monitors at the head cashier's register in the office. We have a consistent employee to customer theft program that has addressed customer shrink theft. The meat department is 50% of customer theft in our store. We can see the meat case at the register from 3 angles with the high definition cameras. And we can see the brand of bacon or which steak a customer picks up. Now this has cut this 50% meat theft dramatically. We cut items from inventory that we identified as steal items. These were items like locks, large containers of medicine, pregnancy tests, health and beauty items, razors. Now our train of thought on these steal items was, why stock items that we know more was stole than we sold? We have reduced cashier sweethearting by hiring good, honest people, good front-end accounting, and with a security system that has every item, the price, in the office screen to check sweethearting. We can bring the camera system up on our computer at home. Now closing at 8 p.m. instead of 10 p.m. allowed us to hire and retain good, honest front-end cashiers. Now we have honest, hard-working, dedicated employees that are trained to watch for theft from employees or customers. Any shrink program can't be successful without the store employees trained and care. Thieves and other employees or customers know when a store's employees simply don't care. Store theft is a consistent problem that needs store strong management. We put thieves in jail and bar them from our store. I strongly suggest jail and a prosecution of thieves. Without prosecuting and barring the thief out of the store, you will never hope to have any control of customer theft. Now we have addressed most shrink in our store. No one will ever cut all the shrink out. All you can hope is to control shrink. I am sure of the fact that if you're not addressing shrink with an aggressive program, you're losing a lot of money, and shrink could possibly be your worst store's problem. Think of an extra 1% bonus in profit. This could make a difference in your store. And last, don't leave books to an accountant. Your job as owner-manager is to manage. Managing starts with a progressive defined store format, a plan to go to market with an acceptable product at a competitive price and at a fair profit to you, the small independent grocer. Now, simply stated, good accountability is the key. The grocery market in this country abounds with opportunity. You can fit between the Kroger's and the dollar stores, change the way your store goes to market, and grow that bottom line, and good luck to you.